Hey there, just wanted to share with you a quick story of one of my clients. So one of my clients owed almost $50,000 to the IRS. IRS says, "Hey, we want the $50,000." My client says, "I don't have the $50,000 to give you." The IRS says, "Okay, we'll take about $700 a month for you to pay us back." My client says, "I don't have $700 a month to pay you back." So that's where I get involved, because the client proved to the IRS, or was telling the IRS, all of his monthly expenses, and the IRS still said, "No, no deal. We want $700 a month." It took me 3 tries to get to the right person that understood the law enough that would accept me sharing with them where in the tax code that my client could not afford to pay almost $700 a month, as well as this is why my client will not be paying $700 a month, and you will not, IRS, take his paycheck or a portion of his paycheck, and you will not levy his bank account. So no wage garnishments, no bank levies, IRS, because based on the rules, the guidelines that you have set in place, my client cannot afford to pay, and you cannot take any money away from my client at this point. His financial situation is different. Everybody's financial situation is going to be different when we're dealing with back taxes. So it took me 3 tries, but my client, and that's how he ended up coming to us in the first place, because the IRS was constantly saying, "This is what we're going to do," but they were not within their rights. Sometimes it's one phone call, you get the right person on the phone with the IRS. Sometimes it's multiple calls, but it's okay, for as long as you know the rules, as long as you can say to a reasonable person that works for the IRS, based on these guidelines, based on these codes, this is what my client can afford to pay or not afford to pay, and this is why you have to leave them alone, IRS. So we were able to get the IRS to leave my client alone and not pay anything because my client cannot afford to. Just remember, guys, when you are dealing with the IRS, you have rights. You have rights. The IRS must take under consideration how much you pay in certain bills. Your house note, your rent, your taxes, your insurance, and that's whether it's insurance, life insurance, that could be your homeowner's insurance, your car insurance. They have to take under consideration your car note. If you have a car note, they have to take under consideration that you're driving back and forth to work. So you have wear and tear on your vehicle. You have to put gas in your vehicle. You have to eat. You have to feed your children. Your children have to eat. So all of these things the IRS must take under consideration by their standards, by their codes, not something that we just make up, but by their codes. They have to take all of your expenses under consideration. Now, if you have some luxuries, some of those luxuries the IRS will not take under consideration, but there are stipulations where you can account for those things in the short run and then get on a payment plan to account for you not having those things in the long run. But you always want to get placed on a properly structured payment plan if you can afford it. And if you cannot afford to, don't rope yourself into taking what the IRS says without knowing the rules, without knowing the laws. Okay? I'm Deltrice Hart Anderson of D Hart Accounting, keeping the IRS out of the pocketbooks, wallets, and bank accounts of taxpayers. And if you owe the IRS and you have been back and forth with them and they're just still giving you grief, reach out to us at www.callthetaxpro.com and we'll take care of you. Till next time, bye y'all.